Hello, I'm Shaun Richards. I'm also not a yes man, I'm not a yes man's economics. Today, the subject I'd like to talk to you about is the euro area and the European Central Bank. Why has this come up? Well, the essential issue is here that they've got themselves out of phase with the economy. What I mean by that is, if you look at the recent evidence, you see that the euro area economy is showing signs of slowing. Now, there's various ways of looking at this. One, for example, is the money numbers. If you look at narrow money or broad money, they've been showing a bit of a slowing since last summer. Another signal of this is the German Bundesbank. Only yesterday told us that it thought that Germany had a weak first quarter. Now, it's spinning this a bit, saying that the boom's going on. But of course, the question is, if you have a weak first quarter, what will happen in the second, maybe third, and so on. So we find ourselves here in a phase where the European Central Bank is responding to what was happening before, an element of the Euroboom, and taking some of the stimulus away. For example, the monthly quantitative easing is only 30 billion euros a month now, down from the peak of 80 billion, except that now it's in a situation whereby the economy might be slowing down. So there's a little bit of a mess here. And what this is as a sort of strategic issue is the fact that maybe not for the first time in history, but perhaps for the first time on this sort of scale, under Mario Draghi and the whatever it takes philosophy, the ECB has ploughed in, pushed an enormous amount of stimulus into the economy. So you've got negative interest rates, we've got a balance sheet over 4.5 trillion euros, except it's done that and carried on with it in a boom. So now what does it do if things slow down? Because it's already starting with its foot a long way down on the accelerator. So when they sit down tomorrow, this will be the issue that they're discussing amongst various things, and they'll be deciding here whether it's up is down or down is up, depending which way they want to look at it. Things have been going really well from their point of view. Everyone's been telling them things are fantastic, with one possible exception, which is the fact that they haven't got inflation up to 2%. That in their world, which remember is very different from the real world, would be regarded as a success. So now they face themselves looking at things on the other side of the coin. Is this going to be temporary? Will it last? What do they do next? This comes into the next stage of the thing, which is whereby they've been giving various hints about future policy. For example, that the quantitative easing numbers might change in September. Another further hint the market's taken is maybe interest rates might go up in June. By this I mean June 2019. So as you can see, now if they start having to find themselves moving the other way, they're in something of a bind. Those who follow my comments on the Bank of England will find that things in some ways are similar here. Bank of England is not doing QE, but it also hasn't at any stage particularly tightened policy. It's merely reduced or stopped some easing. And this is a sort of collective European issue right now, which is a kind of irony, obviously, because the UK in some respects is trying to distance itself. But this is something that goes back to when I started, would you believe, as not a yes man, back in 7-8 years ago. And the question was, how will central banks get out of what they've got into? What I didn't realise then, in fact I had very little idea, was how far they'd go. I did think maybe one day someone might dip into negative interest rates, for example. Well, of course, we've seen that quite a bit around Europe. And we did know then that there'd be some QE. Again, we didn't know how far that would go. No, I don't think anyone had any conception of a balance sheet of 4.5 trillion euros. So then comes the next step, which was always going to be, how will they get out of it? They're always going to be nervous, therefore it was always likely they'd be late. The trouble is, now they might be so late that they find themselves running into the next slowdown. And this is the problem that they face going forward. So if you look round in financial markets, you can see some signs of this. We've seen some hints of the euro weakening. Now, from a UK point of view, that's a little difficult to pick out because, of course, we have the issue with the pound. But maybe for the first time in a while, we've seen a little bit of easing against the US dollar, for example. So this is looking forwards, the debate that we're going to see for the spring, late spring now, and also the summer, which will be, if this carries on, what does the European Central Bank do next? Because it faces itself on a cusp of quite a decision here. And there could be sort of discussions all way tomorrow. So in conclusion, that's the thing for you to go away and think of. Is up the new down? What will ECB policy be? They'll deny all this, of course, but at the minute, they've left themselves in quite a quandary, and they'll be sitting down there saying, well, what will we do next? What will that mean for tomorrow? I mean, they probably really won't answer anything, and the press conference will be more platitudes. One thing, though, that we may get is a bit more emphasis on the issue of economic reform. The reason why I say this is it seems like the ECB's been rebuffed on reform of some of the euro area banks. But in terms of a general picture, they're lost in a land of confusion, as Genesis put it.